Good morning, everybody. I hope you're having a good day, enjoying the weather. Again, it's beautiful here in Norfolk, and it's really good to be waking up in the morning, isn't it, and seeing it and its light. So we've got you for the next 60 minutes. Hannah's going to be talking about the secret to mastering year end for Town and Parish Councils. I hope you're all excited about year end and not too stressed about it. But if you are stressed about it, we'll hopefully reduce that within this next 60 minutes. So we're going to hand over to Hannah. I'm not sure if any of you have heard of Hannah before. I think most of you would have. Hannah Driver, she's our chief accountant. Is that, I make up a title every time, don't I?
I think it changes. Something to do with accounts most of the time.
Yeah, something to do with numbers.
Yeah,
but what's also unique about Hannah, not only she's qualified accountant, she's also got loads of experience dealing with town and parish councils, from the minuscule parish councils to really big town councils. So I don't, try and ask her some difficult questions. See if you can.
We don't need that on a Friday. Let's just make it nice and happy.
Yeah, let's keep it all happy. But yeah, she generally is a wealth of knowledge. We're so lucky to have her in the team. So over to you, Hannah.
Lovely, thanks, John. Welcome everybody. Nice to see some names and faces I recognise. But to those of you who don't know me, hello. Let me just share my screen. So as John said, it's not a Scribe specific session. It's open to everybody, and it's good to see as well that we had quite a few actually people who haven't done the AGAR before, because I think this is ideal for you just to get a feel of the things that you can be doing not only now and up to the 31st of March in terms of sort of preparing yourself, but then there's sort of section on looking at the AGAR itself with a real focus on the numbers element of it, and then what to do actually once you've completed the AGAR in terms of signing it off and the publication requirements, and then a little bit at the end about thinking about next year as well, because that's also something we can be doing now. It's very easy to sort of get bogged down in this is the year end and I must focus on this year, but actually this is a good time to look forward to next year as well. Okay, lovely, let's get started then. So as we said, preparing for year end. So 10th of February today, and it's not, time is kind of rushing on. I think I did this first session maybe a couple of weeks ago when we were still in January, and we talked about having some time between now and the 31st of March to start thinking about the preparation. We're sort of rocketing along. So if you've not thought about that additional time that it's going to take you, then I know how hard that is, because we speak to so many clerks who obviously work part-time hours and it's stretched as it is. But if you can, it's really good if you can sort of schedule some specific time for completing the AGAR. Obviously it's going to take some more work, and it's nice to have that time in your diary, so not just the meetings that you're going to be using to obviously review and sign it off, but actually for you to be working on it. We get lots of emails from clerks when we come in the next morning that are midnight, 1 a.m. sent to us, and I know how hard that is, but really if you can try and guard against needing to work at midnight, then obviously that's going to be a lot nicer for you. Okay, so that's sort of thinking about the general schedule and the workload. So not only in terms of the workload once you get beyond that year end, but also between now and the 31st of March, particularly if you're feeling maybe you do need to do some preparation. That might be in terms of data. So obviously your cash book is absolutely key. It's going to hold all the information that you're going to use as the basis to populate your accounting statements. So if you're here today and maybe your cash book isn't quite up to date, you need to enter some payments and receipts on, your bank reconciliations are maybe a little bit behind, then this is the time to start thinking about doing those things. If you can do your bank reconciliations monthly, it takes a lot of stress out of it. Then if you do get a difference, you've only got 1 month that you then need to look back at. And if you can keep that going on, once you get to the 31st of March, if you've got a reconciling bank position, then that is absolutely key. You can't proceed to start working on your year-end accounts if your bank rec doesn't balance at the 31st of March. Now may also be a good time to be thinking about your VAT return, your claim. Obviously, if you're VAT registered, you will be governed by the timings of your returns and when you need to submit them. But if you're VAT registered and you're claiming via Form 126, then it's fairly much up to you when you submit them. Obviously, there's some criteria in terms of it has to be complete calendar months, and you can only claim annually if it's less than £100, but you can be thinking about when are you planning to do that claim. I'd recommend that you do it at least annually, and if possible, do it as the 31st of March, because it keeps it in line with your year end, and it's nice to have that ending position that you can then check against your VAT closing position. So if you're planning to do that, you can already be thinking about the VAT information that you've got in your cash book. Have you got the VAT numbers recorded against your suppliers? Have you checked that the paperwork is correct? You've got that VAT invoice with that VAT number on, stating the amount of VAT and the rate being charged. So you've got all that information in readiness, so that when you come to the 31st of March and you want to put your claim in, there's not lots of additional work to be doing. So it's just thinking about, can I put some time aside between now and the end of March just to make sure I keep on top of it little and often, just to make sure that I'm in a good point when I get to that place. So there's just a couple of examples from things from Scribe, just nice things to see on here. That's an example of our bank rec. At the bottom, you can say, see A equals B, and just meaning, yes, we're keeping on top of it. Things are balancing. If you're doing your bank rec and you've got a little niggling amount that's always out by, go and find it. Okay. And there's just a little example from Scribe in terms of the Form 126 report extract. Again, you can just be making sure on here, have I got my VAT number? Have I got the invoice date? Have I got all the information that I need in order to be able to then send off my claim form? It's also a good point at this point to make sure you're absolutely clear what accounting approach you're going to be using to complete your end of year accounts, because the different approach that you use will determine how you complete your accounting statements. It's slightly different according to the approach that you need. And I think since you've got some sort of relatively maybe new users here as well, new to this, then it's worth explaining the differences. So we've got receipts and payments, and we've got income and expenditure. So receipts and payments is a fairly simple form of accounting in that you record what happened, when it happened, regardless of when it relates to. You've made a payment, it goes on at that date, and you record it in your cash book as that. It doesn't matter what you're paying for, when you're paying for it relating to, it just goes in at that date of the payment. When you're working in income and expenditure, it's a little bit more sophisticated. It's taking account of timings. You're thinking about, when does it actually relate to? Do I need to make adjustments for these things I'm paying for because they actually relate? I've paid it in this year and it relates to next year, or I've paid it moving around. So thinking about timings. Now, if you are over £200,000 total income or total expenditure for 3 consecutive years, you would need to work in income and expenditure. That's mandatory. Okay. If you fluctuate and move between them, you don't have to move until it's been 3 consecutive years. So you may be pushed over the threshold because you've had a large grant or some SIL income, for example, that's pushed you over that threshold. If that doesn't remain that case for 3 years, then you don't need to move to I&E. Having said that, you can opt to. So if you're under the threshold, you still can choose to use income and expenditure. That can often happen if some councillors or the clerk of the RFO has a more financial background and is more comfortable with that slightly more sophisticated form of accounting. And that's absolutely fine. It's just making sure you understand which approach you are using, and therefore which approach you need to continue to use. And that will generally be the case unless you're restating. And if there's any uncertainty, if you look back at your accounting statements for last year, if box 7 and box 8 are the same figure, then you're almost certainly working receipts and payments. Okay, because there are no adjustments, the figures just match up to the bank position. Okay, but we'll talk more about that as we get into that session in a bit. You may need to move between accounting approaches. So if you do go over that threshold for your 3rd consecutive year and therefore need to be income and expenditure, or equally you choose to move between the approaches if you can, then you will need to make sure you remember that there's a restatement requirement. Both financial years that you submit your information for, so the current year and the prior year, have to use the same accounting approach. So if you move between receipts and payments and income expenditure, remember there may be a requirement to restate. And that's something that you can be also thinking about now. So if you know there's a restatement required, then again, you can be working on that up to the 31st of March. Okay. And then it's also about understanding what you actually need to do when it comes to that point. So this is about thinking about the information that you're going to get from the auditor. Okay, you will get the information, they'll email it out to you, so you'll have everything you need from them. But if you've not done this before, you may want to just go and look on their website. You can find some information. Some of it will be related to last year still, if it's not updated. But the flow charts, the information, the things that you need to do will be broadly the same, and you can start to get a feel of what I'm actually going to need to do. Okay. Also, particularly if there's might be a potential that you can exempt yourself from audit. If you're under 25k, both income, both expenditure remains under that threshold. There are some other criteria that you need to meet, but it might be something to think about as well, understanding what that entails. You will still need to complete the AGAR, you just don't send it to the external auditor. Okay, so this is also relevant. So not only if you are a new clerk and you've not done this before, but equally if maybe you've moved councils and it's a different approach. So if maybe you did it in receipts and payments previously and now you're going to do it in income expenditure, or maybe you've got a different auditor because that has had a little rejig this year as well. Most people are still with PKF, but you may find you have a different auditor. So it's just making sure that you're comfortable as much as you can be at this point with knowing what's expected from you. And if you haven't got it, I'd recommend you get the practitioner's guide, the JPEG practitioner's guide, because that's basically the AGAR handbook, really. It takes you through every sort of section, line, element that you need to understand and sort of adhere to, and the AGAR is covered in the practitioner's guide. It's fairly long. If you download it, you can search in it and find the relevant sections that you need. Okay, and again, excuse me, I've mentioned restating the year. So it's not only when we talked about in the previous slide, if you're moving between accounting approaches, there may also be a reason to restate. So for example, if your previous audit, so last year's audit, the external auditor picked up on something, they may have requested that you restate, and often that will be a scenario where they give you the figures they expect to see in the boxes. So it's fairly simple, you just need to make sure that you do as they've told you. Or sometimes you may have found an error. Often that can happen if a new clerk comes into the role and sort of scrutinise what's happened before and can pick something up looking back at things and something's been missed off or the wrong figure's been carried forward, etc., etc. So if you have that scenario, again, think about making sure that you're comfortable with last year's figures so that you are clear on what your opening position, your opening box one is for this year, because you need obviously the correct starting point in order to be able to do all that work and collating the information. Okay, so now we've thought about that preparation. So be up to date, understand what you need to do. If you can do anything in terms of restatement, do them. We can now think about the AGAR itself. So we're beyond the 31st of March, and now we want to start completing this information. So the AGAR, for those of you who may not have seen much of it before, is the annual governance and accountability return. It's for the 1st of April to the 31st of March. So obviously we're talking now about the year end ending 31st of March 23 coming up. Okay, it's got the sections internal audit report. It's got section 1, the annual governance statement, and then it's got section 2, the accounting statements. Now I want to focus mainly on the accounting statements today, so the numbers part, because that's where the sort of real work and the collation of information is required. But we will briefly just mention the other 2 sections first. They're quite closely interlinked in terms of sort of internal controls and regulations and procedures that you're following. So the internal audit report is the summarised conclusions from the internal auditor's report. You will need to appoint an internal auditor who will come and review your systems and controls. And if any of you may have come to Eleanor's session on Wednesday that we ran on Wednesday morning, that was all about the internal audit. So if you've not seen that, do look back and have it and see if you can get that, because that's really key if you want some more information about the internal audit and things to think about within the internal audit. Okay, but basically it's to consider the adequacy and effectiveness of the council's procedures and internal controls. So things like how their precepts have been calculated, how you maintain the asset register, how you control petty cash, all of those things, they come and review them. Okay, it needs to be carried out at least annually, and the scope and extent will depend on the council's size and circumstance. So it may be more detailed if you've got more going on. Okay, but it needs to be in order that you can answer yes, no to these pointers here, these objectives. So the internal auditor's report at the very least should allow answers to these questions. Okay, so these are the things they should be reviewing. So by them coming in and doing that, this then allows you to complete this section. Okay. As I said, it's fairly closely related to section 1, the annual governance statement. So again, if we just move on to look at that extract from the AGAR itself, it's yes, no statements about sort of the management of certain things, the procedures, the controls that are in place. So this is all about the reviews that are going on about the way that you do things throughout the year. So sort of month on month, week by week, the things that you're doing. So hopefully you're in a scenario where everything's as it should be with regards to your council, and you're able to say yes to these statements. If you're not, okay, no answers must be accompanied by separate documents. So you would need to explain why you've been unable to answer yes to these statements here, if you have to put no, and what plans you have in order to resolve the fact that there was a no response. Okay, if you answer yes, you should be able to back that up by evidence. You don't have to provide any evidence, but if your question scrutinized on it, you would have evidence to say this is how we can see that those things are being done correctly. Okay, so again, it's just to review the things that are going on. That means then we can move on to section 2, the accounting statements, the numbers bit. So this is last year's extract. You have to excuse me, they haven't updated it yet. So as you can see at the moment, we still have the 31st of March 2022 on the right hand side, but of course that's going to become 2023. So our current year on the right compared to our prior year, so obviously 2022 on the left hand side. And when we talked about both columns being the same format, so either receipts and payments or income and expenditure, that then allows comparison because they're both using the same accounting approach. Okay, so these figures will come from your cash book. If you're in receipts and payments, it's nice and straightforward. They can just pop in directly. If you're in income expenditure, you will need to do some work to those figures before you can populate this information, given that you will need to think about adjusting items in the way the VAT is dealt with as well. Okay. Therefore, as we said here, nice and simple. If you're in receipts and payments, get your cash book up to date, reconcile it to your bank statements, and therefore it's pretty much take the information from that cash book and put them in the correct boxes. If you're in income and expenditure, okay, it's about those timings. You've got to think a little bit more about what you need to adjust for. So you'll exclude VAT. As we said, it's either a debtor or creditor. So at the year end, the amount of VAT that you either owe to HMRC or was owed to you. And you'll also need to add adjustments where relevant. So things such as creditors, where you owe invoices for goods or services provided up to the end of March, but you're not going to pay for them until April or beyond. So that's quite normal. Excuse me. If you've had goods or services up to the end of March, you've had that invoice, but because of your payment approval process, it's not going to be paid until April or beyond. That can constitute a creditor. Similar scenario of debtors. If you've got customers who owe you for invoices that you provided to them, they're your debtors, but obviously make sure that it's only goods or services that you've provided up to the 31st of March. So if they've had a service, they've hired out something and they need to pay you, that's a debtor. If they need to pay you, you've sent them an invoice, but actually their hire happens in April or beyond, that's not a debtor, because we're thinking about when does it actually relate to. That income wants to show in next year because that's when the income relates to. The hire takes place in April or beyond. Okay, so it's always thinking about those timings. You can also think about prepayments. So that's where you've paid for things ahead of time and you want to move that money out to next year because that's when it relates to. And also received in advance items. So where customers have paid you ahead of time. So you've had some money in this year, say for hall hire again, but because they're not going to actually have the hall in till June, let's say, we've received that money in advance. We need to move that to next year when that income relates to. So it's thinking about those timings. Okay, as you're thinking about those adjustments, there's a couple of other things to consider as well. Firstly is materiality. So the amount, the level of that adjustment. You might want to set a level and say, look, we're not going to worry about anything under £50. You know, if I've bought some pens or some paper and I get an invoice for that, I'm not going to worry about it if it's under £50. Or if I've got small sundry invoices of debtors, bits and bobs, maybe we're not going to just set a level and say, let's not worry about anything smaller than this. But obviously once you've set that, be consistent year on year with what you're using as your sort of level of that you're not worrying about. And also consider regularity as well. So if you have things that happen on a regular basis, Okay, so if, for example, you have a grounds maintenance contractor who comes in every month, they charge you £1,000 and you pay in arrears, you will have March's invoice due in April. You could say that's a creditor, but actually, if that happened at the back end of last year as well, then you've got 12 months worth of invoices in this year. So I wouldn't worry about moving things around where it just happens on a regular monthly basis anyway. So the correct amount is showing in the financial year. If you had a scenario where your contractor came in March and did lots of extra work, a tree fell down and you cut the tree up and it was another £1,000, for example, then you can put an adjustment in for that additional amount. But if it's a regular amount that sits the same, pretty much the same value month on month, I wouldn't worry too much about adjusting for that. Okay. And of course, make sure that last year's adjustments are reversed. If you're using software, then almost certainly that will do it for you. But if you're on spreadsheets, on paper, then obviously make sure you reverse them before you then put the next ones in, to make sure you've accounted for what happened last year and netted that off before you then move on. Okay, so there's just some examples of adjustments from my Scribe Parish Council that's on the Scribe system. So also accruals we didn't talk about. Slight difference between creditors and accruals. Creditors are those invoices that you've had and received and that you owe, but you're not going to pay into the new financial year. Accruals are where you expect there to be a cost, but you might not have had the invoice yet, but you know you've had some services, you've had some goods, and they're expecting a cost and you want to reflect that. So in this example, I know we've made some printer copies and therefore I want to reflect that cost that I'm expecting to receive that relates to this current financial year. Okay, I've got some creditors, some suppliers I owe, I've got prepayment for some works that we've paid ahead for. It's been delayed and therefore now I want to move that money to next year when the work's going to take place. And I've got some debtors here for unpaid invoices. So they've had their allotment fees, they're using the allotment, they should have paid with this in this financial year, and therefore I want to show that I'm increasing my income based on I should have received that income. Okay, so if you're working on income expenditure, it's thinking about what do I need to move around according to what's actually happened. If you're in receipts and payments, you don't need to worry about that. Sometimes that seems a bit odd and it can be frustrating that you can't make it sort of more correct or appropriate, but you don't need to worry about that. Okay. So then I wanted to talk about the line by line box, or the boxes. Now they're called lines, they were called boxes. So the sort of 1 to 10 on the accounting statements, and some things to think about when you're filling them in, just some things to be mindful of as you do them. Okay. So line 1 then is balances brought forward. As I mentioned, obviously it's important to make sure that your line 1 is equal to box line 7. Okay, so make sure that whatever you finished last year is now your first line 1. Okay, particularly if you've restated or maybe you had a few draft copies of it. Obviously make sure what you actually sent to the auditor is the one that you used as last year and therefore gives you your line 1, your opening position. Okay, then we've got line 2. So our precepts, rates or levies on there, but it's just the precept for the council. Rates or levies relates to drainage boards on there, and make sure it is just the precept as well. So if you've received the precept along with your council tax support grant, for example, make sure you've extracted that so it's just the precept that's appearing in line 2. Then we've got line 3, total other receipts. So that's everything else, all the other income that you've had. Okay, it's total if you're in receipts and payments, that includes any VAT reclaims, everything in there. If it's in income expenditure, you need to exclude the VAT. Also be mindful of not including bank transfers, so movements of money between your council accounts. Don't show them because that just overstates things unnecessarily. And also be mindful that if you've received credit notes, refunds, corrections of overpayments from suppliers, they are not receipts. Although you've received that money, it's actually a negative payment entry. It's a correction of an overpayment. So it should go as a deduction in your box 6 payments. Okay, don't show it as a receipt. So just be mindful of the way that you've dealt with credit notes and refunds. Moving on then, line 4, staff costs. Make sure you get the correct items in your staff costs. Okay, so that is the core salary costs, and the practitioner's guide will break it down for you so you can check all the elements that you're showing. So it's your salary, pension, tax and I. It's not other things related to staff costs such as mileage, such as training. Okay, so make sure you're completely clear on that and show the correct items in line 4. Line 5 is loan interest or capital repayments. So obviously just make sure if you've got a loan and you're making repayments against it, it goes into line 5. And then line 6 is all other payments. So that's everything else that's not staff and not loan repayments, basically. Same thing, sort of flip side, excuse me, of receipts is that you don't have bank transfers in here, other movements of money. You're excluding VAT if you work in an income and expenditure. And again, if you've got customers that you've refunded and you've shown it as a payment, that's not correct. It should be a correction to your receipts. Okay, so if you had, somebody paid you, then they cancelled the hall hire and you gave them the £50 back, for example, and it's a payment, although you've made a payment, it doesn't go into line 6, it goes into line 3 because it's the correction of income you didn't originally received. Okay, so just be mindful of making sure you show the correct things in there. Line 7 then, it's just making sure it basically adds up. So it's box 1, so your opening position plus your preset plus your other receipts less your costs of staff costs, loan repayments and other payments to make sure that it adds up. So that's absolutely key. Okay, and then line 8 is your total value of cash and short-term investments. So as we said, you cannot proceed with this working of this out if your bank reconciliation does not balance, because your bank reconciliation needs to go into line 8. And if you're working in receipts and payments, line 7 and line 8 will be the same figure because there are no adjustments. There's nothing adjusted for VAT. So the figures that you put in should equal that bank position that you have reported in line 8. Okay. If you're working in income expenditure, line 7 and line 8 will be different by the value of those adjustments that you've put through. So VAT, creditors, debtors, prepayments, accruals, etc. that we talked about a few slides ago will constitute the difference between line 7 and 8. It's also at this point worth mentioning unpresented items and the difference between things that are unpresented and creditors or debtors. Okay, unpresented items are things that you have paid for or income that you have received and you've shown on the cash book, but it hasn't gone out of the bank. Okay, so if you still use checks, it's possible that you will have some unpresented payments at the year end. If you've sent off a check to your supplier before the 31st of March, you'll have logged it on your cash book. If they haven't cashed it and it doesn't show on the bank statement by this point, then it's correct, it's unpresented. You want to account for it, you want to deduct it from your bank position in line 8 because it's money that you've reflected has gone out, although it doesn't show on the statement. Okay, same for income. If you had check income come in and you've paid it into the bank but it hasn't shown on the statement, again you would increase your line 8, your bank position, by that income that you have logged. Okay, it is different to creditors or debtors. If you should have paid somebody, that's a different thing to that you have paid somebody and they haven't cashed the check. Okay, you can only have creditors, debtors, etc. if you work in an income expenditure. You can have unpresented items with both approaches if you genuinely have made a payment that hasn't hit the bank by the time that you do the reconciliation. Okay, so just be clear on that, because we do reasonably regularly see people having unpresented items or credit that actually should be the other way round and aren't accounted for correctly. So do make sure that you deal with that appropriately. Okay, so that takes us on excuse me, to line 9, which is your fixed assets and your long-term investments. So again, that may be something that you want to be working on now, just making sure that your asset register is up to date, particularly if you've had new assets coming in this year or if you disposed of anything, just make sure that's up to date, because that total will feed into your box 9. And just again, making sure that it's all information's in there, ignoring depreciation. Sometimes that catches people out as well. It just goes in at the cost that you bought it, and it just shows in there unless you've moved between from original purchase value, which is what most councils use. So you just record it at that original cost, or the proxy pound if it was gifted or it's unknown. That goes in as that. Okay, and it just stays on there until you dispose of it. It may have moved on to the current value, so just make sure you're consistent with the reporting, and that goes into line 9. And then line 10 is your borrowings. So this is the loans or borrowings that you have, and you just need to make sure that you're showing the figure that you still owe on that loan as at the 31st of March. Okay. You also need some accompanying documents along with the AGAR itself. So you'll have your bank reconciliation. Line 8 will be matching off to your bank rec. So as part of the information in the pack that the auditor provides you, they'll want you to fill in their bank reconciliation form so that you can see breakdown of your bank accounts, any unpresented items, and how line 8 has been arrived at. You'll also need to provide a reconciliation between line 7 and 8, only if you're working in income and expenditure, as we said, lines 7 and 8 will be different in I&E. It won't be different in receipts and payments, and therefore you'll need to give a summary of your adjustments, so your debtors, your creditors, your other items that reflect why that's different. And you'll also need to provide an explanation of variances if you have variances that are over 15% for lines 2, 3, 4, 5, 6, 9 and 10. And also if your box or line 7, so your total funds carried forward, is more than twice line 2, which is your precept. So that's basically saying that you're holding quite a lot in the bank and it needs to be explained. Now that will also hopefully be because you're holding a large amount in reserves, and it's just a case of providing the information as to what reserves they're for and listing that out for them. If you need to give explanations, make sure you give full numerical explanations and breakdown of the values that you're working with. Don't just put, oh, I've had a better year this year, we had more income, you know, because our receipts is higher than last year. You need to give a breakdown and say, hall hire was this much more, this happened, we had a grant, etc., this value, and this is how we arrive at that figure. Okay, so be quite clear on that, otherwise you're going to get back from the auditor with wanting more information from you. Okay, so now that we've done all that, we've got our AGAR completed, we can think about signing it off and moving on with what we actually do with it then, and publishing it, etc. Okay, so excuse me. So once you've completed the accounting statements, the RFA will sign them, and then you can have your meeting of the council to go through all the elements, to receive and note the internal audit report, to approve the annual governance statement, to approve the accounting statements. At this point, if you're able to exempt yourself from audit, so you're under that £25,000 threshold and you meet the other criteria, so do check that as well. It's about being in place more than 3 years and not having previous issues with previous audits. You can approve that as well. And remember, if you're exempt from audit, you do everything else, you just don't send the information to the auditor. Okay, and then the chairman and clerk sign the annual governance statement and the chairman signs the accounting statement. So it's all about approving it, making sure you're happy with everything, signing it off. Okay, that needs to happen before you can, or the RFO can set the commencement date for the exercise of public rights. So this is that the accounting records must be made available to view by any interested person. And so therefore, that's why you need to obviously approve it and publish it before that inspection period starts. I think auditors will pull you up on that if your dates don't work out. Okay. And you also must be clear about the dates that you're providing. So it must be 30 working days and include the first 10 working days of July. So it's just about working that out. Again, when you get the information pack from the auditor, when they send that through, it's likely that they'll have a bit at the bottom to say what you need to include, and therefore the earliest date that you can have it, and the latest, so that to make sure that you meet that criteria, because you don't want to fall foul of not getting the right date range. Okay. And then if you're exempt from the audit, you send the certificate of exemption only to the external auditor. Don't send them anything else, although you'll have done everything, you just send them that. Okay, if you're not exempt, then you will need to send them everything, so the AGAR and any other information, so the variances, the bank rec, details of the exercise of public rights, and any other information that you might need to do. So reconciliation between box 7 and 8, explanation of why you might have had to say no to in the annual governance statement. If you've had to restate, you might want to provide that information. Anything else that they'll need in order to work through the AGAR information that you're making to them. And if you're emailing it, don't post it. If you're posting it, don't email it. Okay, they only want it once. And then when you can then think about publishing it. So if you're exempt, you can just publish everything pretty much, your AGAR, the accompanying information, and the arrangements for the public rights and the details of the auditor. Okay, quite a lot of information in these slides, but we will provide them at the end if you want to go back and sort of review the information in them. So lots to take in, sort of just the ways things to follow as you go through. Slightly different if you're not exempt, you'll still publish your AGAR information, but just also alongside it the declaration that the accounts are as yet unaudited. And then once you do get them back, you can just then add the notice of the conclusion of audit, and then that signed record and the certificate as well, that once you've got that back from your auditor. Okay, so lots to think about there. Okay, and then finally looking ahead to the new financial year. So I've put this at the end of the session, sort of as we follow through, to think about new year comes after the completion of the AGAR, but actually a lot of that will run parallel, because you'll be working on your current year end while also needing to work on the new year as well, because obviously we'll be in April. So actually in this time between now and the 31st of March is also a good opportunity to look forward to next year to get yourself in the best position you can be as well. Okay, so in this time between now and the end of March, I would look to set up the cash book for the new financial year so that you've got that information. If you're particularly small and have not got much going on, you may find yourself in the luxury of being able to complete the current year end before you then start putting stuff in the cash book for next year. But if you've got more going on, you're a bit bigger, then it's almost certainly you're going to be needing to do the year end whilst also working in the cash book from April onwards. So if you have to then go through the rigmarole of setting it up and making sure you've got all the information, that can just be unnecessary sort of time at that point. So you can do it now. Okay, and when you do set up your own cash book for next year, then it might be worth at that point thinking about objectively reviewing your accounts records or cash book. So is your accounting system fit for purpose? So does it do all the things that you want it to do? So not only in terms of recording what you need, but actually is it easy to sort of save things? Is it on the cloud? If your laptop blew up or the office burnt down, is everything gone? Can you easily share information with other people, with your counsellors? Are they able to access it on a read-only basis? Do you need training on it? Were you just handed a laptop and off you went and had to learn it yourself? Or have you got access to training, or is there somebody that can help you if you're not sure what to do? Does it suit the needs of your council? So is it that it was great 5 years ago, someone set it up and it's amazing, but actually now no one's really sort of thought about it and things have changed and you want to add codes or different ways of looking at information on there? And how could you improve it? What things could you do better? So it might be, if you did it on paper and we had a couple of people on there, is it time to upgrade yourself to the next level? Okay, so at this point you might want to consider change of medium or change of your coding structure. Okay, particularly if when you come to do this year end, it's an arduous process. If it's really hard to get the information out, how can you improve it so that in a year's time it's not taking you ages trawling through, finding VAT numbers, working out what the staff costs are, because you've worked that cash book better for you? Okay, in terms of the structure, I'd recommend that you base it on your council budget or your preset breakdown. It surprises me that when we have people come to Scribe and they have a spreadsheet, quite often they'll have a very nice list of budgets. So they'll have their sections and their budget codes and their budget values against those codes. And then they'll have a cash book that just has a sort of jumble of information in it that doesn't relate to the budget. And if someone was to say, what have we spent against this budget line? It's not immediately clear from that cash book. So actually, if you can allocate your payments and receipts out to those budget lines, so you can very easily say, look, this is our budget, this is what we've spent, this is what we've got left, then that should be surely the sort of the goal that you're looking for. And also the ability to group codes together so that if somebody said, what have we spent on the village hall? You can run a report off and say, here are all the budget lines, this is what we've spent. Okay, so thinking about improving it, you might want to add more code. So if you have fairly generic groupings, you just lump in everything into admin, but actually it'd be useful to know, what have I spent on subscriptions or the phone or the printer? Maybe I lump in everything to open spaces, but actually want to think about grass cutting and hedges and whatever it may be. Is there opportunity to split it out a little bit more, to analyze it in a bit more detail? Or maybe when it was set up, we added every code under the sun we could think of, and a lot of them we don't use, or maybe they're not relevant anymore. Should we remove them, tidy it up a little bit? And do we record enough information in the cash book? Have we got those VAT numbers in there? Are we able to attach invoices so that we can easily look at them without having to trawl back through our filing cabinet? So just think about all those things, particularly as you do the year-end process as well. What things have you found hard? What is really frustrating you? What could you improve upon? So it's just about that, so that next year when you come to do that, it's just a nice and easier process. Okay, just a quick extract from there. So an example of thinking about our budget codes, we've got administration in the town hall as our sort of top of our headings, our cost centres they would be called in Scribe, and then we've got our codes below, we've got our budgets against them, and we've got our actuals. And because we're posting that information to our cash book, we'll easily be able to produce a report that shows those variances. So just thinking about, can I report on those elements easily if I needed to? Okay, and there we go. That's the end of me talking at you, and I will stop.
Excellent. Thank you very much, Hannah. So we will be going to questions in a moment. But before we do, like if there's any question, if we don't have time to answer all questions, highly recommend you go to the Clerk's Corner, which is a really supportive Facebook group. Jessica will drop a link into the chat there, sign up. It's quite active. There's loads of clerks and auditors in there that will always answer any of your questions. Also, to share, we've got like a lead magnet, well, not lead magnet, we've got this checklist for you for your year end, all the things that you need to do. So some of the stuff that Hannah's covered is in there, as well as actually just things that you need to take care of and look, all the good habits that you need to generate throughout the year. So it covers obviously the year end, but also things that you need to take care of. So Jessica will drop a link on that as well into the chat. But yeah, so that survey, you know, like that we did at the beginning, you know, what we see with a lot of customers that joined us, they do experience this as they're leading up to the annual return, that stress and anxiety and not enough time, and it builds up over the year. And this is exactly why we did create Scribe accounts, because it's very simple to use. And we flipped the triangle the other way round, because actually all the work you need to do is on your cash book, just adding your transactions, your receipts, your payments, assigning them to your cost centers and cost codes, doing your bank reconciliation. It's super simple to do that part of it. And then everything basically is automated after that, you know, so, you know, your reporting, monitoring your budget versus your actual, and then finally doing your AGAR. It is literally touch of a button. So it's very simple just to do all the work, adding your transactions, and everything else just comes for free. So, and then if you have any questions, we always have an amazing support team to support you, and all qualified in terms of accounting, and also Silk qualified. So the combination of simplicity of the product and the support, you know, a lot of, you know, that's kind of what we're offering to try and solve that problem of the stress related to year end. And it also makes you look good, makes you look a lot more professional when you go into your meetings and you've got reports and you know exactly in real time, you know, the financial position of the council. This is kind of a bit of an exclusive. We're working on a product for specifically targeting the smaller parish councils, a lot cheaper. So maybe some of you that are on spreadsheets and you're you are very small, where we're building a cut down, a really slimmed down version of Scribe accounts. We're calling it the starter edition, so we're very excited about it. It has everything that you need to be compliant, but there are some limitations obviously within it. Limited in terms of the number of transactions you can add. It's around 50, but we might play around with that as we get feedback. The cost centers and cost codes are fixed. You can't change them. You know, there's a little limitations, you know, in the product. Basically, you don't set it up, you just log in and start using it. You start adding your transactions, you know, you add your statement from the previous year and you just start using it. So there's no configuration in there. It won't come with phones, kind of the level of support you get with our more premium products, because it's so cheap. It's unable, you know, we've got to, you know, run a profitable business, so we're unable to provide that kind of level of support for the cheaper product. But because it'll be a lot simpler to use, we'll have also, you know, loads of videos that you can watch whenever you want to watch it, with the help documents. You know, we'll do a user support forum, and we'll get back onto that. So it's quite popular. So Jessica will drop a link in there. We've got a waiting list right now, so we'll drop a link in there, and feel free to sign up and add yourself to the waiting list, and then we'll get back to you. Okay, so we're going to go to questions. So if there's some questions in the chat there, but it would be great if you ask them, so you can turn on your audio and video and ask them. So let's just have a little look. Well, there's a question from EPPC admin. I don't know what parish council that is. You can turn on your audio and unmute yourself and video and ask that if you want. Otherwise, I'll ask it for you. Okay, I'll ask it. So yeah, it's the classic old question. I don't know if this is it's the receipts and payments and I&E. Yeah. How do you know which one you're going to be? I don't know if that's a Scribe question though, but yeah. Anyway.
No, well, if you're new into the role and you look back at last year, basically, if your box 7 and your box 8 are the same, then almost certainly your receipts and payments. If you're smaller, then it's very likely that you're working receipts and payments as well. So that's sort of the main criteria. You may have some details of what you did previously, and Scribe will tell you. If you're on Scribe, you can look back at your menu options and see what you've done previously. But if you just have last year's to go by, I would start by looking at your line 7 and line 8, and if they're the same, receipts and payments.
Cool. Alison, you had a question?
Yes, I did.
Hiya.
We're kind of just getting to the point where we're on the sort of cusp of potentially having income or expenditure of more than 25,000, in which case we will not be able to self-exempt from the bigger more in-depth audit.
Yes.
It's clear to me with income, but with expenditure, when you're looking at what your whether you've gone over the threshold, is that including VAT or excluding?
Gross. Yes, gross.
It's gross.
Yeah.
Okay, thank you very much. I had a blank spot.
Yeah.
Okay, Philomena. Thank you, Alison. Philomena, are you there?
Right. Hello. It's quite noisy here because we've got a lot of traffic noise. But yeah, my question was, is it my choice to be on receipts and payments, or our internal auditor? Because she prefers obviously the normal or the higher accounting system. I don't. And then of course my council want to go with what she's suggesting, and I'm saying, well, isn't it my choice as the clerk and RFO?
And you're under 200k.
Hmm?
And you're under 200k in.
Yes.
Yeah.
Yes.
Yeah. So obviously, if it's not mandatory, so you don't have to. So there's that option there, and that's the kind of conflict that you can have, in that sometimes people come in and they're more financially minded and want to use that. But often, if you're smaller and you've not got great fluctuations in sort of income and the things that you spend on, actually there's not a lot of further benefit by being on income and expenditure, because it's all about the timings of things. So if you don't have other income,
You've gone quiet.
Perfectly for a smaller one. So I think that's the trouble that you have to guard against. And I think that there has to be a conversation there, but really, if you're doing it and you don't need to do it, then don't just have to do it just because they want, there's that level of sort of sophistication in there.
Yeah, you got to think about the skills and long-term skills required. So if you're doing monthly I&E, then you do need the financial skills to be able to do that. And it's just the benefit's not really there, so it's a lot better for the council, to keep it simple, because, you're working in the role now, and there might be other clerks in the future. And if you're running a simple receipts and payments, then it's a lot easier in terms of business continuity, because they won't need to hire someone with the accounting knowledge.
Right.
Okay, Claire.
Hi, yes, thank you. I think I will need to restate. I'm a new clerk, and I've noticed that an interest payment came in. So they looked at the book and where it was in January, and then never looked at it again, sort of, and just took the figure that it was then. But when they went back and it's a bank building society, so they've got a bank book, and I see an interest payment went in between then and the actual year end.
Yeah.
Does that mean I need to restate? And if I do I have to contact the auditors, that did the AGAR last year, and well, it's
Well,
the same auditors.
Okay, that's fine. Yeah, so if you find a scenario such as that where the end of year accounts last year were not correct in terms of like the bank statement was not what it should have been, then yes, in theory you should restate. If it's minimal, in theory you could put it into this year, but really, you know, to be correct, it's not the figure that it was on the statement. So therefore it's fairly easy to restate. All you would need to do is just amend your figures last year. So when you complete this year's form, last year's figures will be different to what was actually submitted by the value of the things that you've identified. At the top of that prior year column, you would write restated, and you would just provide an additional piece of information to say why it's restated. So for example, bank statement was incorrect, should have been this figure, and therefore receipts is increased by the value of that interest, and therefore box 7 and box 8 is also increased by the value of that's come in. And it would just be an explanation. You send it off with everything else, they would look at that, compared to last year, say, yes, I can see the differences, absolutely fine.
You just do it when you do the AGAR.
Yeah, you just do it as you do the AGAR. You just restate it so that they can clearly see that that's why it's different to last year, what was actually they got on record for you for last year, and you explain why that is, and that's absolutely fine.
Oh, okay, thank you. That's
Perfect.
great.
Thanks, Claire.
Thanks, Claire. Yes, Richard asked a question, how much of this will Scribe sort out automatically? I hopefully described that in my little talk there. As I said, you know, you add all the transactions manually, and then after that, the reporting, including the AGAR, is all done automatically. Any more questions? I don't think there was any more in the chat, but feel free to throw up your hand. Otherwise, we're going to assume you're totally sorted and you're going to smash year end with confidence and a smile. Any other questions? You got Hannah here, you may as well use her. She is an expert. So any niggling questions? Otherwise, we will say goodbye. Final call? Nope. Okay, good. Well, have a really good day, everybody. Have a very good year end, and we'll see you on the next Scribe Academy. We're working on, oh, we've got a question maybe down here. I haven't looked. Oh, thank you. That's not a question. Yes, so yeah, we're working on season 5 of Scribe Academy coming up. What have we got, Jess? What have we got lined up?
We have, a couple. So not in season 5, but at the end of this month or end of March, we have organising successful community events. So that's really good in the run up to King's Coronation if you're looking to hold any events there. We'll also be doing risk assessments for those events as well. So that will be a separate session. And hopefully in the lineup, we do have Becky Walsh, who has attended SLCC training events before. So she might be doing something around emotional resilience as well.
Yeah, and we also, we'll also probably do, yeah, we've got our lawyer back, Alex. We haven't got the topic yet, but that'll be coming up. And then we've got CIA. What's CIA?
So stands for Clerking in Action. It's a new kind of series we've come up with, just to invite clerks to speak about their success stories, maybe grant funding, and we've got coming up. So it'll be a session with roughly 2 or 3 clerks just to share their experience, maybe give some advice as well. So kind of a nice networking event there.
Yeah, so I'll send out the slides and the video of this event. But if you want to talk on Clerks in Action, CIA, if you've got, particular, projects you're really proud of, what you've done at the parish, and you want to share your story and motivate other clerks and RFOs, then please reply to my email, and then I'll reach out to you so that we could get you onto the lineup for Clerks in Action. Okay, cool. Take it easy. See you all later. Bye-bye.
Bye.